Good morning, everybody. Welcome to today's midweek update. Man, oh man, do we have a lot to talk about. We've got earnings, Shopify, Reddit, Uber, Lyft. Oh man, some wild action there. Well, we're also going to talk about the market consolidating, recent gains, what's happening under the hood. And of course, for those of you that have been tuning in, and if you're not following yet, make sure that you hit that follow button wherever you happen to be watching from: X, YouTube, Instagram. Love you all. Make sure that you're following so you get all these updates. All right, let's hop on over to the charts and take a look at some of these earnings right here. So to start things off, we've got Shopify. Shopify has gapped down significantly, about 20% on the day. So if you were caught in this, you shouldn't have been caught in this. There's a very important reason why, and we spoke about it yesterday in yesterday's video, posted a reel, posted over on YouTube, on X, and shared something about a stage 2 uptrend. Now, for the sake of those of you that didn't see yesterday's reel, what a stage 2 uptrend is that you're going to see a stock that's moving in a steady uptrend like this over here, right? So back over here, stage 2, getting into there. And what makes it be a stage 2 uptrend? Simple. You have this red line, that's the 50-day moving average. You have this gray line, that's the 200-day moving average. You want both of those to be pointed north in order for it to be considered a stage 2 uptrend. This is something that Stan Weinstein came up with. It was also followed by some other people. Maybe you know these names: William O'Neill, Mark Minervini, of course, myself. What that does is it helps to confirm that the stock is actually moving higher. And then when it consolidates, you want to buy while the stock is still in an uptrend, not while it's way down here and hoping for it to bounce and maybe turn around. You increase your odds of success dramatically by going for stocks that are already in stage 2 uptrends, that are in confirmed stage 2 uptrends, rather than trying to pick a bottom. Sometimes picking your bottom works. Sometimes you get this all over yourself, right? And you could fill in the blank. So Shopify down about 20% so far. If you're trading this, or if you have other thoughts, please drop it into the comments. I would love to hear from you. Next up, Reddit. Reddit is a recent IPO. The IPO was on March the 21st, and you can see how prices already moved since then. You had this nice IPO base where price was rounding out the bottom over here, and then it started to consolidate, and today is breaking out. And you could actually see a breakout if I put some annotations over here, and you could see the latest pivot from breaking above yesterday's high to this section back here. And so far, the volume on here is pretty strong. We want to see where Reddit closes for the day. One of the challenges with Reddit that I didn't take this one, is on this breakout, where would you place a stop? Interesting question, right? Maybe you place it at today's low. Maybe you place it below this low over here. If you were to do that, right? So let's say that you got in right at the pivot, right around 50 and a half. And let's say that you put your stop at yesterday's low. You're risking about 6.5%. For me, that's on the high side. I like to risk closer to about 5%, sometimes 4%, if I'm lucky, 3%. If you tighten up the stop to today's low, then you're risking 2%, but this isn't a very strong area of support, at least not yet. So for me, at this stage, this is a pass. I would rather go for the sure thing than something that maybe has some juice, but is a little iffy. Right? Let me know your thoughts on that as well. Go ahead, type into the comments how you trade earnings. To give you an example of something that I think is more of a sure thing, at least from a technical perspective, or not a sure thing because nothing is sure in the market, right? There's no 100% uh, certainty, but something that gives us a much better area of where are we going to get in, where are we going to get out, much easier to have a trading plan. Trading plans are essential, as you know if you've been following me for any amount of time. Kava, right there. This is one where I entered this right back here, right? And so when price was coming in, it gave a very clear level to get in right here when it was breaking above this high and getting above that purple line. That's the 21-day exponential moving average. And it also gave a very clear spot to place a stop right below that daily low. The reason why that daily low is important is because this day counted as an outside reversal, meaning that price was headed down, reversed positively, took out all of the day before's action and even the day before that's action, and started to change character and could potentially start a new uptrend, which it hasn't. It's up about 20% in just a couple of weeks here. Let's go over to Reddit. Back to Reddit for one more second. Right? So what's different about Reddit than Shopify? Aside from it being up about 4.5% after earnings and Shopify being down 20%. From the chart, what's different? Can you catch it? We just spoke about this. Stage 2 uptrend, right? Well, we don't have the 50-day or the 200-day moving average yet, but because this is an IPO, it's not going to have those. But you see these shorter term moving averages here, right? You see the 5, you see that green one there, that's a 10, that purple one, that's a 21. Which way are they headed? They're all pointed up, right? So it's not that there's something mystical about moving averages. It's telling you which direction the price has been trending. And so we want that. We want the price to be in an uptrend and showing that initial strength. And you have that here. So that's one of the things that Reddit had that made it better. Let's take a look at Uber, right? Uber compared to Lyft. Both of them in the cab space, right? So Uber, here's what Uber did. Uber's down about 8.5% after reporting earnings. What do you notice about the moving averages here? The red and the gray. What do you notice? The 50-day moving average is rolling over, right? Is this in a stage 2 uptrend? No, it's not. It was in a stage 2 uptrend all back here, right? So let's go back to when this move started. So you can say that it started around here, and it started to come into a stage 2 uptrend when it got into, I'd say, this zone. Started moving up, pulled back to the 200-day. Now it's no longer in a stage 2 uptrend. It's in stage 3, right? Potential top. but then rallies back. And then once that red line confirms right here, starts to turn up. Now it's buyable again. Rallies, pulls back to that 50-day moving average. This is the kind of pullback that you want to be buying right in here, right? You don't necessarily want to be buying this one. Why? Because you're not in a stage 2 uptrend. You have all this overhead supply, the moving averages coming down that are in your face, showing that momentum is down. You have a lot to fight trying to rally from down here. Don't just pick a bottom. But when you get a pullback like this, the momentum is still up longer term. So that's what makes this buyable, but not this. Hopefully that makes sense. Let me know in the comments if you have questions. I'll take a second here just to flip through some of the comments that have come in. I see a lot of people hopping on from all over the place. Welcome, everybody. Let's see here. Med, Rathod Sagarg, Bensal, Ashley, welcome everybody. All right, so not in a stage 2 uptrend. This one's in a void. How about Lyft? What did Lyft do today? Also reported earnings, also breaking out. It's up 8.5%. What's different about this? Which way is that red line pointing? And the 200, right? That you happen to have both pointing that way. You always want to make sure that you have both the 200-day and the 50-day moving average both pointed up. You're in a stage 2 uptrend over here in Lyft. They're not always going to work out that way. It just so happens that on today, when we're talking about earnings, that's what happened. And that's one of the key things, too, that could keep you out of trouble. You don't want to be in stocks where maybe it works, maybe it doesn't. I'm kind of going for a moonshot here. Yes, we're dealing in probabilities, but we always want to make sure that we're fishing in the right pond. You want to have a trading business. You don't want to have a trading hobby. Hobbies don't pay very well, right? And sometimes they win, sometimes they lose, and it's kind of fun, but a hobby is not going to pay you longer term. You want a trading business that is going to pay you longer term. Treat trading as a business and it'll pay you well. Right, so that's Lyft. Let's talk about the major indexes. Flip over to this chart of the NASDAQ. Now, we'll just stick with the NASDAQ because basically the indexes all look like this on the daily time frame. They've had a run up, right? They ran up off the lows. You could take a measurement from back here. Over the past 3 weeks, prices run about almost 8% on the NASDAQ. And yesterday and today, we're getting a little bit of consolidation right here. That is very constructive, especially at this juncture. There's a couple of other things that are happening underneath the hood. We'll get to that in a minute. But as far as the index goes, this action here is very constructive. Runs up, pulls back. You notice too, here's something else for you guys to notice, especially for those of you that might be intermediate level trader, right? A little bit beyond the novice, a little bit more advanced. You've been studying this stuff. The difference between the price action here versus, say, the price action back here, aside from being in an uptrend, right, moving steadily higher, this action right here, the price action, is tighter than this, right? The bars themselves are a little bit tighter than what they are back here. That's showing that volatility is getting less, and that's something that tends to create more base patterns, more buyable patterns in the market. When price starts to get narrower and narrower and narrower, it gives us a much better range to play where we could have those low risk, high reward type of opportunities. Let's take a look at the weekly time frame. Right, so over here on the NASDAQ, where's price? Price is right around the prior all-time high resistance going back to way back here in 21. That's where price is sitting at right now. It poked its nose above it a couple of months ago, back in February and March, broke down a little bit, consolidated that big run that we had from October, and now it's getting back into that zone. Why there? Right? Why would everything just pause there? Is it the Fed? Is it earnings? Is it something going on around the world? We could speculate until the cows come home, right? For an old term. But from a technical standpoint, here's what's here's something that we could look at, right? Because, well, what is technical action? It's not voodoo, it's the decisions that are being made in real time by every market participant, and that's what's driving price. Right? So this is just a reflection of all the decisions that people are making. If we pop over to a monthly chart, I've got the Russell up here, right? And if we zoom out a little bit on the Russell, there's a couple of points of resistance that the Russell is also at. The Russell is at its March 22 highs. And so what tends to happen, and you saw this also on the NASDAQ, is when price gets to a point where it was a long time ago and finally gets back to that point, it tends to take a breather, especially when it's run up for a long time. And not only that, when some of the other indexes do similar, they tend to move together, right? So the Russell, which has been consolidating significantly more deeply, when it got to its prior resistance back in March, it started to consolidate here, right? So there's a lot more overhead on this chart than there was on the NASDAQ. So when the Russell hits that point and starts to pull back, it's far more likely that the other indexes will follow suit. We can be prepared for that just by looking at the chart. It doesn't take that long. It's just an understanding of what's going on here. Let's go back to what's happening right now on the daily time frame of the Nasdaq, because there's one other thing that I want to point out on this chart, and I'll move it over to the side here so my face is out of the way a little bit. This down here, what we have right down there are the number of stocks making new highs versus new lows over on the Nasdaq. And you can see back here, while we were consolidating, right, for that whole pullback, what happened? We're down there in the red. That means that new lows are outpacing new highs. That is something that I follow consistently. I've been following that indicator for about 15 years, taking a look at the number of stocks making new highs versus new lows. I look at it on both the Nasdaq and the NYSE. They're fairly similar. For the purposes of this, we'll just stick with the Nasdaq. But if you go back in time, right, as far back in time as TradingView will let you go, it lets you go back roughly 15, 20 years. You'll notice that there's never a period where you're having a long stretch of new highs being made without the number of stocks also making more new highs than new lows. When it flips, when you start seeing more new lows than new highs, at the very least, you end up getting a pullback or the consolidation. At the worst, you end up getting a bear market. So that's why whenever I see this, I start to get defensive right away. And that's what I did back there. And now that we're out of it, better conditions could be around the corner. But we don't want to just take that cue from the indexes. We want to also take a look under the hood, see what kind of stocks are setting up. Well, coming into today, we already spoke about a few of them. One of the ones that was on my list that I traded already was Kava. Another one that I'm taking a look at right now is KSPI. This is consolidating right now. It's consolidating near its highs. It's in that stage 2 uptrend. It's trading above the 50-day moving average. The 50-day moving average is in an uptrend itself. and prices tightening up over here. So that's got me interested. Two others that are high on the radar. BV. This one reported earnings on, looks like it reported earnings on Thursday, last Thursday, May 2nd. Gapped up, strong move. Now it's consolidating tightly. If price could get into new high ground, that would get me interested. Next, the last one here that I think we'll talk about is, what was the ticker here? Let me pull this up for just a second. And it's WPM. Now, WPM, wheat and precious metals. Now, precious metals have been running quite a bit, and this is tightening up right ahead of earnings. It reports earnings tomorrow after the close. So this is one that I have on my radar for earnings. Personally, I don't like to trade into a report. If price, or if this stock were going to report earnings in, say, 2 weeks, I would be willing to trade it right here. Maybe we get a run into earnings. But with earnings being tomorrow, I'd rather sit, wait, see what it does, and then trade it after it reports. So that is what is happening underneath the hood. Let's take some questions. And while you guys are busy getting your questions in, make sure that you are following whatever platform you're on. If you're on Facebook, LinkedIn, YouTube, Twitch, X, Instagram, or Rumble, make sure that you are following. Make sure that you are commenting. I read all the comments that you guys leave. And if you are not already on our newsletter, we publish a newsletter. We've been publishing it multiple times a week. Loads of education, loads of tips, tricks, tactics are in the newsletter. Go to merrillwealth.com/newsletter and get on the newsletter. So let's see what questions you guys have here. Scroll through Instagram. You guys on all the other platforms, get your questions in. Let me know where you're from, where you're watching from. All that good stuff. All right. So for those of you that want to know about daily updates, can I do this more frequently? I actually do this more frequently. I just have it for our research members. So if you're interested in daily research analysis, my trading plans, that alerts, all these things, we have it over on merrillwealth.com. Go to merrillwealth.com/research. And it's right there. Let's see what other questions you guys have. Welcome, Jonathan. Welcome, Akila. Welcome, Mahesh. Go ahead, type whatever questions you have into the chat. Let me know that you guys are alive. All right, someone talking about Rev G. Question about Rev G. Yeah, Rev G has had a fantastic move. Here's something else that, well, what can you tell me about Rev G? What can you tell me about the trend of Rev G? Hopefully you guys have been paying attention and have heard me say this term half a dozen times already during this live stream. Stage 2 uptrend, right? So when price pulls back and tightens up, right? You don't want to buy up here. You want to buy down here. And you can buy down here knowing that this stock is in a stage 2 uptrend. How do you know that it's in a stage 2 uptrend? take a look at the 50-day moving average, take a look at the 200-day moving average. Are they both pointed north? Yes, they are. And this gives you a very nice entry right there. This one came up in our premium service. Tish had brought this one up. She was looking at this reversal bar here. She placed her stop right under here. At least that was the plan. And so prices, yeah, that did choke off the trade. But what she was doing was preventing price from pulling back in because she wanted to make sure that she locked in her profits. Perfectly fine. If that's your plan, then that will certainly lock in profits. Um, but price continued to rally, did not undercut this day's low. Price rallying again some more today. We'll see if price follows through. Maybe it gives Tish even more profits. Any other questions before we wrap things up here? Usman, Crypto Sandy, welcome. Scorpio, welcome. Any other questions, final thoughts before we wrap things up and call it a day here? And then after that, I've got a bunch of stuff going on with our members. So for those of you that were interested in the premium service, that's where we do a lot more coaching. We do group coaching. We have multiple calls each week. Today we have our Mara midweek mastery with Coach Stu. Coach Stu is phenomenal. He's averaged about 40% year over year for the past several years. He was someone that started out as a member and became a coach, and he's been a coach in with us over at Mara Wealth for about 3 years now, doing a phenomenal job. So shout out to Stu, and looks like that's it for today. So for everyone that joined us, I want to say thank you so much for joining us and sharing your thoughts. I look forward to seeing you next time. And make sure that you are subscribed to the newsletter. We put out so much information every day. I want you to get it. I want to see you improve. And I want to hear from you. Until then, take care. Much love. Peace out, everybody.